I think it's very safe to say that we are right around the support level. My sense is that we will at some point, maybe even by the end of the year, actually hit an all-time record high, a price we've never seen before. I think the fact that we rose so quickly above 2000 marks that as a level of support rather than resistance anymore. That's a major change and a huge move in gold.
Escalating tensions in the Middle East and the possibility of the Israel-Hamas conflict spilling over have driven gold prices to reach $2,000 an ounce on Friday. Notably, gold has gained over $160 since October 7th and reached record highs in various currencies, including the Japanese yen, Chinese yuan, and the Australian dollar. Editor at thegoldforecast.com, GaryWagner, predicts that gold prices will reach $2,100 or even $2,200. Gold prices hit their highest point since mid-May on Friday, surging about 9% in the past 2 weeks. This surge is attributed to investors seeking the safety of gold due to concerns that the Israel-Hamas conflict might escalate into a broader Middle East conflict. As a backdrop to this, there have been significant casualties in the conflict, with over 4,651 Palestinians killed in Israeli attacks on Gaza and more than 14,000 wounded. Gold prices have been riding on safe haven flows from the Middle East conflict lately, and focus on humanitarian aid and securing hostage releases seems to suggest that a potential ground invasion from Israel can wait, IG market strategist Yip Jun Rong said. Furthermore, gold has found support as concerns of another Federal Reserve interest rate hike in 2023 have subsided. Fitch Solutions noted that higher interest rates increase the opportunity cost of holding gold. However, there are indications that the Federal Reserve might halt its rate hikes, which is viewed as a positive factor for gold prices. Interestingly, GaryWagner notes that although the Federal Reserve typically raising interest rates exerts downward pressure on gold prices, there are now indications that they might halt the rate hikes, which is seen as a positive development for gold. Before diving into GaryWagner's insightful interview, subscribe to our channel and give this video a big thumbs up.
The Federal Reserve was pressuring gold lower as they raised rates. There have been recent comments that they could either have concluded that rate hike cycle at this point, or they're not going to raise rates again this year. That was construed as extremely bullish by market participants. Of course, the geopolitical tension that you just mentioned was the large ignition, so to speak, of a second stage. And that stage has taken gold to a high today, I believe, right around $2,009. We haven't seen that in a while, but it is the tact and the speed that gold has ascended to higher values that is most amazing. I think it's very safe to say that we are right around the support level. My sense is that we will at some point, maybe even by the end of the year, actually hit an all-time record high, a price we've never seen before. I think the fact that we rose so quickly above 2000 marks that as a level of support rather than resistance anymore. That's a major change and a huge move in gold. There's so much uncertainty involved that my sense is it is going to be contingent on whether or not other Arab countries or Hezbollah, for example, in Lebanon, enter the fray. Because if that happens, it will be a terrible scenario and gold would move much higher, not for the reasons we want to see it move higher, but it would absolutely be a impetus for gold trading to a new contract high. And that's the fear. But if the longer it goes on without any kind of ceasefire talk, negotiations, any end game that involves some sort of peaceful resolution, gold has nowhere to go but up. Nowhere to go but up. And I think that the fact that gold has risen is only the beginning of what we will see 2 months, 3 months from now. I think we'll be talking about a quite different story, looking at $2,100, $2,200 an ounce gold. Escalation is almost a certainty. And if that does come to pass, gold is going to react in a much more volatile way, moving higher to the upside with larger gains. The one thing that I would like to kind of interject is when we look at components of a portfolio, where do you want the bulk of your portfolio during times when you require safety? Is it equities? Is it the dollar? Gold seems to stand out head and shoulders above the other asset classes. And so you're seeing a lot of professional traders, hedge fund managers, individual speculators working with gold in ways they haven't done in years. Gold was not a sexy metal, so to speak. It didn't have the shine that it has right now. As we've said, it's a terrible reason for that shine, but facts are facts. Gold has come into its own recently and most likely will continue to grow in terms of interest and acceptability, and larger percentages of portfolio by major players will continue to grow.
Federal Reserve Chair Jerome Powell has hinted that the U.S. Central Bank is leaning toward keeping interest rates unchanged at its upcoming meeting, all while keeping the door open for a potential rate increase if they spot signs of sustained economic growth. According to a report from the Wall Street Journal, Powell has suggested that if the recent progress in taming inflation continues and long-term Treasury yields stay elevated, the Fed might hit the pause button on its ongoing series of interest rate hikes. Powell acknowledges the complexity of their task, particularly in the face of market uncertainties, where they must strike a balance between tightening monetary policy too aggressively and not enough. Following the Fed's September meeting, where they chose to hold off on rate hikes, inflation surprisingly rose more than anticipated, and payroll figures unexpectedly showed the strongest growth in 8 months. This has provided some backing for roughly a quarter of economists anticipating another rate hike. However, Gary believes that the Federal Reserve will likely adopt a more dovish and accommodative stance, given the current geopolitical climate. He suggests sticking with their initial plans could do more harm than good. Nonetheless, he also acknowledges that predicting the Fed's decisions can be unpredictable.
I don't believe that the Federal Reserve has the tools or the wherewithal to really have any kind of major impact on the geopolitical crisis that is currently at play. Their dual mandate is maximum employment and keeping inflation below a certain target. The fact of the matter is they cannot be as aggressive as they want to be because of the fear of what that will do to the economy during a time of absolute geopolitical chaos.
Yeah.
And so they can't do what they want to do. I personally think that they will pause longer than they would have. They might even implement a rate cut earlier than projected in the last dot plot. Realize the last dot plot went from the belief on the June dot plot that there would be 4.25% rate cuts next year, totaling 1%. They amended that to having 2 rate cuts of 0.25%. What that means is if they do follow that game plan, real interest rates are going to be above 5% for the entire year of 2024. And that doesn't bode well for any kind of economic growth. So their hands are tied to actually solve the issues that they're put in position to solve, which is to bring down inflation and maximum employment. And
Right.
so are hindered greatly by what is going on in terms of the geopolitical conflicts. I think they'll be much more dovish than they had perceived before. I think they realize that if they maintain their current course and the course they wanted to be on, they're going to cause more harm than good. They're not looking to do that. And I think that they're going to back off. I think that they're going to implement a longer pause. They are going to postpone doing any major retooling of how they're working with inflation and the things that their mandate states they should until they see some sort of resolution pathway, so to speak. And so it's going to greatly hinder the ability of the Fed to do what they're trying to do and what they've set out to do. I would be surprised, but in this geopolitical climate, it wouldn't be out of line for them to do. But I think it's unlikely. But the question is, we don't control what the Fed thinks. I think it would be a bold move and it would work against them. That's my sense.
Israel's military admits one of its tanks accidentally hit an Egyptian position outside the Gaza Strip, wounding at least 7 people. A convoy of 17 trucks has brought vital humanitarian aid to Gaza through the Rafah crossing. At least 266 Palestinians have been killed in Israeli air attacks on Gaza in the last 24 hours. As Gary mentioned, this war is benefiting gold. What are your thoughts on this? If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.